If you receive Social Security or SSI right now, I need you to stop whatever else you are doing for the next few minutes and stay with me because there is a rule taking effect for July 2026 that changes who can look inside your bank accounts, how often they can do it, and what happens to your monthly check if they find something you did not report. This is not a proposal. This is not something being debated in a committee somewhere. It is a documented rule change moving through the Social Security system right now. And most seniors I hear from have either never heard of it or have heard a scary headline about it without understanding what it actually means for their own deposit. I am not talking about something that might happen someday. I am talking about a real change to how your benefits are verified starting this summer and the specific things you need to understand before it touches your account. For over a decade, I have studied retirement benefits, senior tax programs, and the financial rules that affect seniors every single year. And the pattern I see most consistently is honest, hardworking people getting blindsided by a rule change that nobody sat them down and explained in plain English. That is exactly what I'm going to do for you today. Now, before we get into it, I want to ask you something directly. Are you subscribed to this channel yet? If not, hit that subscribe button right now and turn on the notification bell. Here is why that matters specifically to you. Social Security rules, Medicare rules, and the verification systems behind your benefits change constantly. And when they change, nobody sends you a letter explaining what it means for your situation or what you need to do about it. This channel covers every single change in plain language the moment it happens. If you are not subscribed, the next update that directly affects your monthly check will pass by without you ever knowing it existed. Subscribe now and let us walk through this rule together. Here is what we are covering today. First, what this new bank access rule actually is in plain English without the bureaucratic language that makes it sound scarier or more confusing than it needs to be. Second, who it applies to right now and the specific group of seniors who think they are not affected but absolutely are. Third, exactly what the system looks for inside your accounts, including the accounts you forgot you even had. And finally, the scam that is already attaching itself to this rule and targeting seniors who just heard about it, plus the exact steps to protect yourself and stay compliant. Stay with me through all of it because the part most people get wrong is near the end, and it is the part that actually protects your check. Let me start with what this rule is and why it exists. The system at the center of this is called AFI, the Access to Financial Institutions System. In plain English, AFI is the electronic tool the Social Security Administration uses to log into financial institutions and verify what you actually have in your accounts. It has existed for years. What is changing in 2026 is how often they are required to use it and how few restrictions stand in the way when they do. For a long time, there was a threshold rule. The SSA would only run a full bank verification when your reported resources were over a certain dollar amount. If you alleged you had very little, they often did not look further. That threshold acted as a kind of speed bump. It limited how often the agency reached into your accounts. Under the rule change taking effect, that speed bump is being removed for a much wider group of people. The agency is now directed to run financial institution verification on essentially all new SSI claim allowances, regardless of how much you say you have, and to do it more frequently across the life of your claim. I want to be precise about why this is happening because the reason matters. The SSA's entire job is to pay the right amount to the right person at the right time. SSI specifically is a needs-based program. It is designed for people with very limited income and resources, and it carries a hard resource limit. For an individual, that limit has long been $2,000 in countable resources. Go over it and your eligibility is affected. The SSA's position is that improper payments, money paid to people who are over the limit, are one of the biggest problems in the program. So, the logic is simple. If they verify your accounts more often and more completely, they catch resource problems earlier, before a large overpayment builds up that they later try to claw back from you. That is the legitimate side of it. And I want you to hear it clearly because understanding the SSA's reasoning is exactly what helps you stay on the right side of the rule. An overpayment is not a gift. If the SSA pays you money you were not entitled to because you were over the resource limit, they will eventually find it and they will ask for it back. More frequent verification is in part the agency trying to stop that problem before it grows into a bill with your name on it. Now, here's the part that catches people. And I need you to really sit with this one. A lot of seniors hear SSI bank access rule and think that does not apply to me. I am on regular Social Security retirement, not SSI, or I am on Social Security disability insurance. That is different. And you are right that this specific rule today is written for the SSI program. But here is what I want you to understand about the direction this is moving. SSI is almost always where these verification changes start. It is the needs-based program, so it is the one where checking your resources is already built into the design. The tools, the systems, the automated bank access, they get developed and expanded inside SSI first. And the broader conversation in Washington on both sides of the aisle increasingly circles around the idea of means testing other benefits down the road. Means testing simply means adjusting what you receive based on how much money and how many assets you already have. And here's the key point. You cannot means test anything without first being able to see inside someone's accounts. The verification machinery being built and expanded for SSI right now is the same machinery that would be needed to look at resources for any other benefit in the future. So even if this exact rule does not touch your retirement check today, the system behind it is the thing to understand because it tells you where all of this is heading. I am not saying that to frighten you. I am saying it so you are not surprised later. Let me show you what the verification actually does once it runs, because this is where it gets concrete. When the SSA runs AFI on you, it does not just check the one account you told them about. The system can run up to 10 geographic searches tied to your information. It searches based on your address, and it can also pull in addresses and identifying details connected to your representative payee if you have one. It detects the accounts you reported, and critically, it detects accounts you did not report. And this is the part I really want you to absorb, because it is not about hiding anything. It is about forgetting. A lot of seniors have an old account somewhere they have not thought about in years. A savings account at a bank that got bought by another bank, a small credit union account opened decades ago for a car loan that has been sitting with a few hundred in it ever since. A certificate of deposit a relative set up. You may genuinely not remember these exist. The system does not care that you forgot. It finds them and it counts them. So if you are on SSI and you have been operating under the belief that your countable resources are well under the limit, an old, forgotten account surfacing in a scan could change that math in a way you never saw coming. Here is the full list of what the system is built to find. It looks for what are called liquid resources held in financial institutions. That means checking accounts, savings accounts, money market accounts, certificates of deposit, credit union share accounts, and special purpose deposit accounts like Christmas Club or Holiday Club accounts. Essentially, anywhere you can deposit money or hold a certificate at a bank or credit union, this verification is built to reach. It runs across all 50 states, the District of Columbia, and the territories. The vast majority of financial institutions, around 96%, participate in the automated system, meaning the agency can verify electronically without you ever being involved in that step. For the small number that do not participate, the agency uses a paper process instead, but the reach is nearly nationwide, and the bank scan is not the only system in the picture. There is a whole set of tools that work alongside it to build a complete picture of your financial life. There are payroll information exchanges that can tell the agency what you are earning through an employer's payroll system, sometimes quickly enough to adjust your next check. There are systems that pull from national new hire databases. There are wage verification tools specific to SSI. Each one exists to confirm a different piece of your income and resource picture. The point is not to memorize the acronyms. The point is to understand that verification in 2026 is automated, layered, and far more thorough than the system many seniors remember from years ago. Before I show you exactly how to protect yourself, I want to say something directly to you, because the fact that you are still watching right now tells me something. Most people see a title like this: click, feel a jolt of worry, watch for 2 minutes, and move on without ever learning what to actually do about it. You stayed. That tells me you are serious about protecting what you depend on, and you understand that knowing how a rule works is the difference between getting blindsided by it and staying ahead of it. So, if you have not subscribed yet, do it right now. Hit that button and turn on the bell, because the verification systems behind your benefits are exactly the kind of thing most seniors find out about only after a problem has already landed in their lap. You are here early. Stay subscribed so you stay that way. Now, let me walk you through what this means in practice using the kind of example the agency itself uses internally, so you can see exactly how a verification plays out. Picture someone applying for SSI who reports a small checking account with about $20 in it and a $100 certificate of deposit. Their total reported resources are around $120, well under any limit. Under the new approach, the agency still runs the bank verification even though the reported amount is tiny because the verification is now required regardless of the alleged amount. The scan comes back and confirms the checking account, finds no other hidden accounts, and the person's resources are validated right around where they said. Because everything checks out and stays under the small tolerance the agency uses, the process moves forward cleanly. No problem. Now, change one detail. Suppose that same scan comes back and shows the checking account holds far more than the person reported, or it surfaces an additional account they never mentioned. Now, the agency has to dig deeper. It has to verify the value of that certificate of deposit. Look harder at the other balances, and the small tolerance that would have let them skip extra steps no longer applies because the verified total is higher than what was reported. And here is the through line across the whole life of a claim. If your verified resources stay low and consistent, you may face fewer repeat scans. But if a scan ever shows you near or over the limit, expect to be verified again and again at multiple points, because the agency is specifically directed to keep checking when the numbers suggest a resource problem. So what does this actually mean for you, and what should you do? This is the part most people skip, and it is the part that protects your check. Let me give it to you as a clear set of actions. First, if you are on SSI, find every account with your name on it, not just the one your check goes into. Sit down this week and make a complete list. Your main checking, any savings account, any old account at a bank that may have changed names or been acquired, any credit union account, even one you opened decades ago and forgot, any certificate of deposit, any club or special purpose account. If you are not sure whether an old account is still open, call the institution and ask. The goal is simple. You want to know everything the scan would find before the scan finds it, so there are no surprises that put you unexpectedly near the resource limit. Second, understand your countable resources against the limit. For an individual on SSI, the long-standing countable resource limit is $2,000. Add up the liquid resources across all those accounts. If you are comfortably under, you have far less to worry about from a verification. If you are anywhere close, this is the moment to understand exactly where you stand, because being close is precisely when a forgotten account can tip you over without warning. Third, if your situation has changed, report it correctly rather than waiting to be caught. The agency is direct about this. The systems are designed to find unreported resources, and the safest position is always accurate, timely reporting on your end. If you came into money, even a modest amount, understand how it affects your eligibility and what your reporting obligations are before the next verification cycle, not after. Fourth, and this is the protective heart of it, when the agency contacts you about verification or sends you a redetermination, respond promptly and honestly, and keep documentation of everything. The single worst thing you can do with a benefits verification is ignore it or guess. If you are unsure how a particular account or asset affects you, that is exactly the kind of question to bring to a qualified professional who handles these matters, because the answer depends entirely on the specifics of your situation, and I cannot give individual advice through a screen. Now, I want to deliver something important, because anytime a new rule like this gets attention, a scam attaches itself to it within days, and this one is already happening. Here is exactly how it works. A senior hears about a new Social Security bank access or verification rule from a video, an article, or a neighbor. Within a short time, they get a call or an email from someone claiming to be a Social Security verification specialist, a benefits compliance officer, or a federal account review service. The caller says that because of the new 2026 rule, the senior's accounts need to be verified or pre-cleared, and that they can handle the process, protect the senior's benefits, or shield their accounts from the scan for a fee. Sometimes a few hundred, sometimes a percentage of the benefit going forward. Here is the one sentence that exposes this every single time. There is no fee, no service, and no third party that can shield your accounts from official verification or do this process on your behalf. The verification is something the Social Security Administration conducts directly. There is no authorized middleman who can opt you out of it, pre-clear you, or protect you from it for money. Anyone offering that is selling you a fiction, and often what they are really after is your Social Security number, your bank account number, or a verification code, which is the actual goal of the call. Write this rule down because it is your protection. The real Social Security Administration will not call you out of the blue and ask you to confirm your Social Security number or your bank account details over the phone to comply with a new rule. They already have your number. When they need to verify something, the legitimate process runs through your application, your redetermination paperwork, and official notices, not through an unexpected inbound phone call demanding immediate action. If someone calls claiming they can handle the new bank access rule for you, end the call. Then, if you have questions about your own situation, go directly to the source yourself. Call the SSA at 1-800-77-21213, the number you look up yourself at ssa.gov, never a number a caller gave you, and report the scam contact to the SSA fraud hotline at 1-800-269-0271 and to the FTC at ftc.gov. Those reports genuinely help investigators track these operations and warn other seniors before they lose money. Let me bring everything together right now in the simplest way I can, because all of this comes down to a short list of things you can actually do this week. Number 1, if you are on SSI, make a complete list of every financial account with your name on it, including old and forgotten ones, so you know exactly what a verification would find before it runs. Call institutions directly if you are unsure whether an account is still open. Number 2, total up your liquid resources across all of those accounts and understand where you stand against the resource limit. If you are close, treat that as your signal to get clarity now, because a forgotten account is exactly what tips a closed case over the line. Number 3, report changes accurately and respond promptly to any verification or redetermination notice. Accurate, timely reporting on your end is the single best protection against an overpayment you later get asked to repay. When a question is specific to your finances, take it to a qualified professional who can look at your actual situation. Number 4, protect yourself from the scam. No one can shield your accounts from official verification for a fee. The agency will not cold call you demanding your Social Security number or bank details to comply with a new rule. If that call comes, hang up and verify directly through ssa.gov or the official number you look up yourself. I want to close by saying something directly to you because I think it matters. This rule is part of a larger shift toward more automated, more frequent, and more complete verification of what seniors have. The systems are getting better at looking, and that trend is not reversing. None of this comes with a friendly letter walking you through what it means for your check. The agency does not call to coach you through staying compliant. The system simply runs. And the people who stay protected are not the ones with the simplest finances. They are the ones who understood how the verification works, knew what it would find, and got their own picture in order before it ran. You watched this entire video, you already understand this rule better than most seniors ever will. Now take the next step this week. Subscribe and turn on the notification bell if you have not already, because the verification systems behind your benefits keep changing, and this channel covers every change in plain language before it lands on your doorstep. The next update could be the one that affects your specific situation, and you want to be here when it posts. And before you close this video, share it with one person in your life who is on SSI or Social Security. A parent, a sibling, a neighbor, someone from your church or your community. One share from you might be the thing that helps them get their accounts in order before a verification surprises them. The system is not going to call them and explain any of this in plain English. You might be the only one who does. I will see you in the next video right here on Senior Life Academy.